Well, joining me now with more is Ted Thatcher. He's president at Bright Lake Wealth Management. Ted, it's great to have you on the show, joining us from the West Coast this morning. We got a lot of West Coast guests, so we much appreciate you getting up early, especially after the holiday here. What should investors and our viewers make of this market here, as it does still seem to be choppy?
Good morning, and it is great to be with you. You know, at the end of the day, I think there's two primary things driving everything going on in the markets right now. Certainly, the level of uncertainty around the entire tariff conversation, this toll booth, as it were, that's gotten thrown into our world trade routes. And so, the Trump administration really has been talking about tariffs for so long. I think that what I would really emphasize, and has been discussed quite a bit lately, is just the level of confusion around what to expect. The market doesn't really care who is causing the confusion or who is causing the uncertainty, but if it cannot figure out what is coming next when it comes to, well, in this case, certainly the tariffs. We had these high numbers. Now, the majority of all these different countries are down to 10%, but the emphasis is now being placed on China. What, concessions are going to be made by both sides. It's just caused too much confusion and uncertainty for the market to be able to make sense about it. And we're already seeing that reflected even again this morning.
It's interesting here. Of course, questions about the path forward, with China saying overnight that it would retaliate if other countries work with the U.S. in a way that would harm Beijing. I think for our viewers out there wondering, when could this uncertainty lift? What are you telling your clients?
Well, I think it's a great reminder of, hey, we do need a plan and strategy with investing that accounts for volatility. In terms of when we might see, a path forward, I think that a lot of the broader community, in the investing world is asking for a quick resolve to this, because it's been cited, of course, that this is a negotiation tactic. Well, negotiation tactic or not, if we can't get clarity, the market isn't going to settle down. Jamie Dimon was, of course, cited on that Fox Business interview saying, he's being calm, but, all of JP Morgan's recession assumptions have now been jacked up to 60% for the year. And so I think we're all hoping for quick resolution and quick negotiations or clarity, if that really is what is causing this.
Interesting. Of course, one thing perhaps clouding the clarity here is remarks from President Donald Trump that he wants to remove Fed Chair Jerome Powell. How is your particular firm navigating that, and what that could mean for the equity market?
Sure. Well, I think that definitely comes to the economic vital signs, right? We're thinking about GDP. Of course, the last time the Fed met, they revised the GDP estimates down, actually, of course, signaling a weaker than expected economy. The inflation figures have come down. We're seeing that trend toward the 2% number that Jerome Powell has cited quite a bit. And right beyond that, of course, we look at the labor market, which is showing some signs of weakening as well. And so at the end of the day, the Trump administration has made it very, very clear. They are putting pressure on the Fed to lower rates. And if Jerome Powell isn't going to play ball, it's not really surprising, especially, given the type of rhetoric that is very common from the Trump administration, that Trump's being very, very vocal about that. I do think, though, that Jerome Powell is starting to have a case by the numbers to lower rates. So we'll see if it ultimately culminates in more pressure between the administration and the Fed or not. But I would even say more broadly, there's a lot of societal pressure to also lower rates. So many Americans are trying to enter the housing market and get a little bit of relief around their debt situation. I think, when you could put all that together, hopefully Jerome Powell will start to play ball a little bit.
What do you see as the right path forward for interest rates?
Well, I think it's hard, and Jerome Powell has had this really difficult situation because we've had inflation that's been so sticky. We've talked about it, how sticky inflation really is and the cost of things. With that trend coming down, though, and with the economic, numbers we're seeing, with the GDP number being revised down and the softening labor market, those are the things the Fed is looking at, that dual edict that they have. And if they can make a case by the numbers to lower, that is what's going to give them that relief. And so in terms of how we're navigating it, ultimately, I don't believe we're going to get a tremendous amount of decreases this year, but I do think that trend is down. certainly as we round the second half of 2025.
Ted Thatcher, president at Bright Lake Wealth Management. Ted, thanks so much for joining.
Thank you.